What items are needed to process an SBA loan in a timely manner? Okay, so let's start with it. There's a Form 413, that's a personal financial statement. There's a debt schedule, there's an application, a resume, and projections is typically what you need in order to get a business acquisition purchase approved. Obviously, you're gonna need the purchase and sale agreement of the business at some point. You're gonna need the seller's financials for the past 3 years and a year-to-date interim statement. So that's what we need from the seller, right? Because you're buying an existing business, and if you want to get the highest leverage, which on business acquisition is 90% with an SBA 7A, as well as an SBA 504. But remember, the 504 is for hard assets such as real estate and equipment. So for the 7A, we start with your financial statement. That's a pretty easy templated form. If you own any existing businesses, you have to do a business debt schedule. 3 years of personal tax returns for you, and 3 years business if you own a business, with a year-to-date interim statement for each of the businesses that you do own. They're going to want to see executive summary, a resume on you, the borrower, and that's pretty much all we'll need. Obviously, if we'll need a purchase and sale agreement at some point. From the time we get all these documents, it's usually a 10 or 14 day turn time to get a letter of intent or a commitment letter from a bank. So it's a relatively quick process. SBA 7As can generally close within 60 days. Now, if there's some complexities, that sometimes takes a little bit longer, such as there's real estate involved, we have to do different appraisals and so forth. That could slow down the process, but 60 days is realistic if you have their documentation up front. So what I do with my clients is I have a system where it has all the forms in the system, and you simply go through, you download, you complete the forms, you upload the necessary tax returns and financials, and you're off to the races.
Hi, this is Beau, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
And so that's really the process. It's really not that difficult. It's just a matter of your financials, your tax returns, your personal financial statement, the business you're buying, 3 years of their tax returns, and an interim statement year to date. An executive summary with projections, what you're going to do as you take ownership of the business, what are your strategies, and what the next 3 years will look like from a financial standpoint. And I have third parties that can help you put together business plans. Now, if you're starting a business, it's a little bit different, right? We don't have the financials. We're not buying an existing income stream or cash flow. So you get a haircut on your LTV, typically from 90, you're looking at 80 to 85%. And on business startups, you're going to need a much more detailed business plan because you're not buying something that has a proven track record. So you're going to spend more time putting together a detailed business plan with projections on a startup as opposed to a business acquisition. On business acquisition, it's quite simple. Tax returns for the business you're buying, tax returns for you, a couple documents like Form 413, if you have an existing business, a debt schedule, and there's an application and a bio resume is needed. That's really it. It's not that complex. Purchase and sale agreement, if there's inventory involved and itemization, that's got to be put together on the purchase and sale agreement. It's important to break up, hard assets versus what's the blue sky or what's the intangibles on those purchase and sales in agreement. Especially for some borrowers, they're going for 504 and they're buying an existing piece of real estate with the business. So that's where it's really important to break out, well, what's the hard assets versus the blue sky or the intangibles, the actual value of the business. And the 504 is good for financing real estate, but it's not going to finance any of the blue sky or the intangibles. So that's where sometimes you do a 504 with a companion 7A, or you might do the 7A loan instead. Anyway, there's a lot of a lot of nuances to SBA financing, but it's pretty simple. And I help lots of people navigate and figure out what bank or non-bank SBA lender will be ideal for this situation that you're looking at doing. You can use SBA finance for expansion as well. So you can go ahead and, if you have an existing business, there's some lenders, some preferred lenders, SBA direct lenders, that will lend up to 100% for business expansion. So let's just say you had a self-storage facility and that business wanted to grow and buy another self-storage facility. You can potentially get up to 100% financing on an expansion with the 7A, not the 504. So anyway, book a call below. Happy to discuss any of your financing needs, whether it's SBA, conventional, bridge financing, or you need some working capital. We have many solutions. We work with many banks and non-bank lenders throughout the nation. Thanks for your time, and I'll see you on the next episode.